In this video we are going to talk about cheap dividend stocks to buy now. So before starting, please like this video and subscribe to this channel for our future updates. With the stock market trapped in a rut for the past month and inflation threatening to eat into gains, many investors are turning to dividend stocks to risk off. This is because a firm that can support a regular payout to shareholders has a much more stable balance sheet than one that is so focused on covering its routine operating expenses that it is unable to share earnings with investors. Big dividend stocks like Johnson & Johnson, ticker J&J, can often cost more than $100 for a single share, which is unfortunate for many small investors. Look to these 10 cheap dividend companies to buy under $10 per share if you're searching for something a little more reasonable, but still with a big yield. Number 10. Prospect Capital Corp, SEC. The dividend yield is 9.1%. Prospect Capital, a BDC, is the next best inexpensive dividend stock to purchase under $10. As a BDC, it functions as a publicly traded private equity firm that invests in other companies and then distributes a portion of the earnings to shareholders. And the SEC portfolio has recently showed a lot of promise, with returns of about 50% in 2021. SEC investments are diversified across a range of sectors and principally focus on loans that generate consistent premium payments to support regular 6-cent monthly dividends, which will appeal to dividend investors. Over the course of a year, those 12 paychecks add up to a substantial return. Number 9. Oaktree Specialty Lending Corp, OXL. 8.2% dividend yield. Oaktree is a Los Angeles-based credit services organization that provides loans to middle-market companies, typically in the form of senior loans or equity co-investment, to provide them actual control over the operations of the businesses they invest in. It has a $2.3 billion portfolio invested in 135 companies, with floating rate investments related to larger interest rate markets being the most typical structure. This has been especially beneficial for OXL as interest rates have climbed recently. As a result, Oaktree's last 4 dividends have been a case study in dividend growth, increasing from 11 cents per share to 14.5 cents per share each time. When you consider in distributions, that dividend growth combined with solid operational success has resulted in a year-to-date gain of nearly 36% for this cheap dividend stock. Number 8. PennantPark Investment Corp, PNNT. 7.4% dividend yield. PennantPark is another business development company, or BDC, that focuses on middle-market companies with a market value of $10 million to $50 million that require additional capital to expand. It invests in a diverse range of businesses, including hoteliers, tech enterprises, energy companies, and manufacturing. PennantPark's portfolio is well diversified, and as a result, it has been able to capitalize on the tailwind of rising economic growth in the United States during the previous year. As PNNT's efforts pay off, profits are passed on to shareholders in the form of a 12-cent quarterly dividend, which gives some extra cash on top of share prices that are up more than 40% in 2021. Number 7. America First Multifamily Investors LP, ATAX. 7.2% dividend yield. ATAX is a mortgage servicing firm that primarily invests in multifamily and student housing revenue bonds. These obligations are backed up by the prospective rent from renters once the facilities are finished, ensuring a steady flow of revenue. The America First portfolio currently includes around 12,000 rental units in 15 states, and it continues to grow year after year. On a total return basis, which includes dividends, shares are up more than 50% year to date, thanks to stellar performance as well as an increase in quarterly payouts from 9 cents to 11 cents in June. Number 6. SFL Corp Limited, SFL. 7.1% dividend yield. SFL, a $1 billion marine shipper based in Bermuda, manages around 80 vessels, including tankers that service the global oil and gas industry, as well as dry bulk container ships that transport commodities for manufacturers and other businesses around the world. Shippers have been able to command greater rates this year due to global supply interruptions and a general inflationary environment driving up prices in many parts of the business, and SFL is no exception. SFL's 15-cent quarterly distributions provide a hefty yield, demonstrating that even nominally cheap income investments can deliver impressive returns. Number 5. InLink Midstream LLC, InLink. 5.4% dividend yield. Incorporated in North Texas, Oklahoma, and Louisiana, InLink is a midstream energy firm that provides transportation and storage services to the oil and gas industry. His principal business is the compression, storage, and transportation of natural gas and gas liquids through an 11,900-mile pipeline network. He also operates more than 30 processing facilities and fractionators, which separate raw fossil fuels into usable fractions. As economic activity has increased and natural gas has been in high demand as a cleaner alternative to polluting energy sources such as coal, InLink has had a successful year in 2021, with its stock price having more than doubled. However, while InLink's dividend has not yet recovered to pre-pandemic levels, its quarterly payout of 9.4 cents per share reflects a yield that is more than 4 times that of the median component of the S&P 500. Number 4. ASE Technology Holding Company Limited, ASX. 4.2% dividend yield. ASE is a Taiwanese semiconductor company that trades on the stock market. Unlike your typical chip maker, technology is not concerned with its own designs or fabrication facilities. Rather, it is concerned with providing services such as packaging and testing third-party circuits. Therefore, it is significantly smaller, with an estimated worth of roughly $16 billion, but this specialized technology company has strong connections to other chipmakers in the region. As a result of global supply chain issues that have created a chip bottleneck, ASX services have been in high demand as manufacturers look to partner with this company and expand operations to new heights. The stock has increased by more than 70% in the last year, but the company's dividend has more than doubled from 2020 payments to 30 cents per share annually, which is good news for income investors who are looking to increase their income. Despite its recent increase, ASX remains one of the most affordable stocks, with shares currently trading at less than $7.20 per share. Number 3. Mitsubishi UFJ Financial Group Inc. MUFG. 3.8% dividend yield. With a market capitalization of $75 billion, MUFG is a large Japanese bank on par with other global brands such as Switzerland's UBS Group Inc. (UBS), and roughly 3 times the size of leading U.S. regional banks. MUFG is a subsidiary of Mitsubishi UFJ Financial Group, which is headquartered in Tokyo. MUFG, which was formed in 1880 and is headquartered in Tokyo, is a rock-solid corporation with the scale to withstand any economic downturn. The Japanese economy has been doing well in 2021, and this company has benefited from these tailwinds, with gains of almost 35% year-to-date since the region's COVID-19 crisis ended. Number 2. SunCoke Energy Inc. SXC. 3.7% dividend yield. After being named one of the top small-cap dividend stocks to watch in 2021 in March, SXC has delivered in spades since then, with shares up 50% in 2021. In spite of the fact that SunCoke is a coal stock, the company focuses on coking coal, which is used to transform iron ore into steel, rather than mining coal and relying on power plants that use this unquestionably harmful fossil fuel. Since the beginning of the year, SXC has performed very well as a result of strong industrial and construction demand for steel as a result of a rebounding global economy. Additionally, the company's regular quarterly distribution of 6 cents per share was unaffected by the pandemic-related disruptions in the first quarter of 2019. Number 1. Berry Corp. BRY. 3.2% dividend yield. In comparison to Wall Street's mega-cap energy companies, Berry is a minor oil and gas producer with a market capitalization of approximately $600 million and approximately 3,700 active wells, the most of which are located in the American West. However, there are some advantages to being small. As a result of the substantial increase in energy prices over the last year or so, BRY's stock has risen from a low of about $3 in November 2020 to more than $7 today. Fruit of the looms. $0.04 quarterly dividend was reinstated in 2021, and it has since been boosted by 50%, which should pique the interest of income investors. This will give a reliable source of income on top of the recent outperformance. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.